Hello everyone, thanks for tuning in and welcome back to Easy Markets. Today we are unpacking a packed lineup of market updates, from inflation concerns in the US to new moves in the AI race and big shifts in gold and crypto. Let's get right into it, and if you're enjoying these market breakdowns, make sure to like, subscribe and stay connected for more daily updates. So our first story centers on the latest US inflation data. October's headline inflation rate landed at 2.6%, right on target with what analysts were predicting. Now, while this might seem like a good sign suggesting inflation is under some level of control, there is more to the story. The core inflation rate, which excludes the more volatile food and energy prices, is holding firm at 3.3%. This tells us that beneath the surface, inflationary pressures still persist in the economy. For the Federal Reserve, this may implicate their plans for interest rate cuts in the near future, as they aim to bring inflation closer to their 2% target. So how did the markets digest this information? Wall Street's major indices responded cautiously. The S&P 500 and the Dow posted modest gains, but the tech-heavy Nasdaq Composite dropped by 0.26%, likely reflecting concerns over prolonged interest rate tightening, which impacts tech valuations more heavily. Asian markets followed suit, showing mixed results with a notable drop in Hong Kong stocks by over 1%. This caution reflects broader market sentiment as investors are trying to interpret what this information or inflation data really means for the coming months. Now, moving on to technology and the increasingly fierce AI race. This time, the spotlight is on Shinshu Technology, a Beijing-based tech company that's just made some impressive strides in AI. Shinshu has rolled out an upgraded version of its text-to-video tool, Vidu, which can now produce longer videos from text prompts alone. This new capability is part of China's broader push to establish a leading position in AI innovation, challenging Western companies like OpenAI. OpenAI, for its part, has hinted at adding similar video generation tools, though nothing has been publicly launched yet. This competition between China and the West in AI technology is likely to have ripple effects across multiple industries, from entertainment to education and even to military applications. Now over to the semiconductor industry. AMD has announced plans to lay off around 4% of its global workforce, roughly 1,000 employees. This decision is largely driven by AMD's focus on refocusing its resources on the AI chip sector, where it's aiming to compete with NVIDIA, the current leader in this space. Now, it's worth noting that NVIDIA has built a massive lead in AI chip technology, with its GPUs being used in everything from machine learning models to data centers around the world. For AMD, this layoff is a strategic move to free up resources that can be channeled into research and development, helping them catch up in a market that's expected to grow over the next decade. Now let's take a look at Wall Street's Trump trade as it gains steam. Investors are increasingly looking toward companies and sectors that could benefit from a Trump re-election in 2024. Sectors like fossil fuels, defense, and certain manufacturing industries are seeing a surge in interest as they align closely with Trump's policy pledges. However, here's where it gets interesting. According to Wells Fargo, some of Trump's proposed policies, particularly tariffs and tax cuts, could reignite inflation. If these policies lead to increased costs for goods, the Fed may be forced to slow down any rate-cutting plans they've put in place, creating an interesting dynamic between fiscal policy and inflation management. Now, over in Europe, markets opened with slight gains on the Pan-European Stock 600 index, while the FTSE 100 in London dipped a bit. Beyond the immediate market movements, though, there is a fascinating trend developing in the European tech space. Several European countries, led by Italy, are investing in what's being called sovereign AI. This refers to artificial intelligence that's developed in Europe and adheres to European regulations and cultural standards, with data stored locally rather than being subject to US-based cloud providers. With Italy working on language-specific AI models and other countries following suit, Europe is making a clear push to reduce its reliance on US tech giants. This could have a profound impact on the global AI landscape and how data is controlled and managed across borders. Finally, let's talk about the impact of the US election on gold and cryptocurrency markets. Gold, which is traditionally seen as a safe haven asset, has actually been under some selling pressure recently. This is largely because the US equity markets have rallied post-election, leading investors to reallocate funds from gold into riskier assets. On the crypto front, we're seeing a strong rally in assets like Bitcoin and Dogecoin, which tend to benefit from a more deregulated environment that Trump's policies are expected to promote. However, many analysts believe that gold's recent dip is temporary and that strong demand from central banks as well as continued geopolitical risks will keep gold prices supported over the long term. And that's a wrap for today's market update. From inflation and AI to the evolving dynamics in gold and crypto, these are the stories shaping the global markets right now. I'd love to hear your thoughts in the comments. Do you think inflation will ease up, or are we in for a longer battle? And what's your take on Europe's push for AI sovereignty? Let me know down below. Don't forget to subscribe, hit the bell icon, and stay tuned for more updates right here. Thanks for watching, and I'll catch you in the next video. Have a good day.